Oh, I love it. Okay. Officially, good morning. Happy Sunday. Welcome out to the Sunday Market Insights brought to you by MarketWatch Group. My name is Scott. I will be your host. As always, this is for education and illustrative purposes only. Nothing we do is intended as a recommendation to buy or sell. Any decisions made should be done at your own risk because we're not brokers, we're not advisors. Good morning to you, Kevin. Good morning to you, Craig. Good morning, John. Trouble logging in on the iPhone. Honestly, my understanding is that's where the bad user experience is on the phone. So I'm looking into that. Hopefully that can help. And good morning to you, El Jago. All right, let's go. What are we going to do today? We're going to posture this market. And we're going to decide, is it still bullish enough that we want to put trades on? Are we thinking about a hedge? If so, what would that look like? Based on the quality of the market, we should come up with some conclusions about our risk management parameters right now. How many trades? How much risk per trade? How much total risk? Is it down from where it was a few weeks ago? Probably. We've ebbed a little. What we're going to do is look to see if we are going to flow again. John Welsh logged in on iPhone, no problem. Okay, good feedback. I appreciate that. Good morning, Ray. Good to see you. Great looking crew here. I'm scanning to see if I see new names. Now, Sandy, good morning. I see Regina. Welcome, Regina. Glad to have you. It's a friendly group. Feel free to ask questions and make comments as you see fit. Yeah, Captain John. Captain John, are you new? Because I see John Welsh. John's a seasoned veteran. Captain John, are you new? Love the name. Okay. I think that's everyone. If you guys are scanning the crew and you see a name I missed, tell me. Let's welcome the newbies to the crew. Glad to have you. What are we going to do today? Posture. We're going to look at the economic calendar and see what is influential to us. And of course, with all eyes on the Fed, all eyes are also on inflationary data. This week we have CPI, PPI. Those will be important. I got to tell you, I sort of found myself like yanked to this, like, this employment adjustment is going to mean September. But then, I don't know, I saw a couple things and I'm like, maybe the equilibrium in the labor market is enough for them to keep it stable a little longer. I don't know. It's going to be interesting. September, October meetings will be interesting. Sector searching. We're not looking to search. We're looking to identify the sectors we want to search. We don't really end up with time for that. Someone in the group yaps too much, just talking. And it's like, can we just get through it already? I don't know. So we kicked that to Monday. Monday, we are going to be running a consumer cyclical, staples. We meant to do it last week. We forgot. Really, you guys forgot to remind me. I'm not pointing fingers, but I'm just saying. Okay. Watch list maintenance. We'll do it as it comes. Early week opportunity list. We'll make a beautiful one, hopefully, and see where that puts us. Trading plan section of the week. Those who are new, we do a loop. Every 8 weeks, we loop through the trading plan. And we will help you create the greatest trading plan you could ever have imagined that you would have. This week, we're moving into section 6, so you're kind of catching us at the tail end, but it's great. Section 6 is record keeping, which leads to section 7, analytics, which leads to section 8, goals. Right? So you've missed the logistics. That's the first 5. That's where we're defining ourselves, defining our market analysis, defining our trading systems and rules, defining our risk management, defining our routines. A lot of work's been done in the last 5 weeks. Now that all that's in place and you start executing the way you're supposed to, then you keep records to say, am I achieving what I intended? And if not, where's the breakdown? And what can I do to fix it? That's where we look at record keeping and analytics. And we try to fix it by setting goals for ourselves to make adjustments. And then it cycles back to the beginning and we do it again. So hopefully you can just jump into that and then join us as we continue forward. But if you have questions, let me know. So, all right, let's get going. Let us move forward into our posturing process. This is where we are. It's great looking crew. Love it. I keep glancing over to see with 2 new people. I want to make sure that I'm catching that. In fact, I'm tasking the group. Your task is to, if you see an unfamiliar name, say hello, flag me, make sure that we bring them into the fold with open arms. Okay, it's August 10th. I can't believe it's August 10th. I swear we were just like, I can't believe it's March of this year already. It's August 10th. My daughter leaves to go back to school in like a week and 2 days. I'm very sad about that. And she's going with like her best friend. And so her desire to come home will be less. I'm afraid we will see her less this year. Okay. What did we see? Last time we saw this, a 1-point drop. Kind of a big one. Kind of a, okay, if it drops a quarter of a point, half a point, we're just like, that's just normal wear and tear. If it drops a full point, we're like, okay, is there something bigger going on? It's not confirmed, right? It's not like, oh, something nasty's happening. That would be more like 1.5, 2 points. It's a 1-point drop. So it's significant enough that we need to really flesh out what's going on, have a sense. And what we're going to be looking for is what would make it worse, what would make it better, so that during the week we're kind of like, okay, is it stabilizing for us and we see what we wanted to feel better, or is it to continuing to worsen and we should start thinking about the other side of things, right? As traders, we can move quickly and fluidly. So we don't wait. If you were wondering like, oh, so do we wait until it goes to a negative and then we trade bearish? Absolutely not. Absolutely not. In fact, it rarely goes negative, at least in the last little while. It did go negative. We got down to the minuses here. Right? You can see now on this time when it did, we got close to 20% or actually touched 20%. We got negative back here. Oh, where are you? We got negative back here, October of 23, when we had a correction. And so, yeah, we'll be on the lookout for it. That's for sure. Oh, we got negative here as well. Oh no, that's when we just got negative. Okay. Great point, Sandy. If you put your question in, the crew will oftentimes answer it, which is an amazing demonstration of the group, because the askers have become the answerers. It's an amazing cycle. And then I'll check in and give my 2 cents too. Okay. So we don't have to wait for it to go negative. What we look at is we look at the momentum as well as the score. The score is the overall assessment. The current movement is paramount to us deciding. So with this, this drop here, 5.75 to 5.5, this drop here, that's a little bit more significant. Now we get to see, where are we now? And if you're new, as we go through this, there's an entire section full of videos, educational pieces. One of the courses is about literally market posture. So if you're like, hey, I want to learn more about the scoring here. What is long term for 2 points, short term for 3, volume, major market, sector rotation, each for 1, VIX for 2. That's how we get 10. How do we do it? Go watch. It's beautiful. It's beautiful. Okay, let's go. Saw it. Regina, amazing. Helpful, I hope. I hope it was helpful. I'm glad it's there. I'm glad you were able to dive into it. Thank you for letting me know. Very cool. All right. Let's go. First things first, long term. Oh, there we go. Bob Rowland has an amazing question. He said, can you define the difference between correction, pullback, retracement, consolidation? Yes. So real quickly, pullback, retracement, and consolidation can all be used interchangeably. Press is here. I didn't even see it because he didn't say hello. That's all right, Press. I forgive you. Hello to you. Late's not an excuse for not saying hello. I'm just saying. Those are all used interchangeably to describe the market that was in an uptrend moving in a downward fashion. We tend to put assignments like a correction. A correction is a technical definition. A correction is a 10% from high to low. So you'll notice that I'll come in. I'll come in, and I even did this on Friday. I said, where does 10% put us, just so we know? Or maybe I did it Thursday night. Where does 10% put us? So that's minus 64. That puts us down around 576. So if this thing were to have a 10% correction, now this looks close because it's the weekly, but that's right here. So a correction right now would actually be not. It would be bad because it would get below this line, but we could handle a 5 to 7% consolidation or retracement. For me, a pullback, and we can sort of, that's one of the interesting things about trading is different people use the vernacular different ways. For me, a pullback, I think flag, a minor pullback, just doing 1, 2, 3 days, pulling back. That's a pullback. That's a flag. If it goes further than that, then it just becomes a retracement or a consolidation that's a little bit bigger. You have a technical indicator called Fibonacci's. You've probably heard that term, Fibonacci retracements. If the premise is like 1, 2, 3, 8. No, let's see. 1, it's 2, 3, 5, 8, 13, 21, 34. Like it's this number sequence, and everyone's like, this is the magic sequence. You can solve life with it. Yeah, you can't. But it does create retracement possibilities. It works well because it gives you like 6 different retracement levels, and you're like, it's going to hit one of them. Well, yeah, probably will, but it doesn't make it magic after the fact. So it's good for perspective, but anyone who puts too much weight into the fibs. So that's what a retracement is. Just like, which one is it? Is it a 22% retracement, a 38% retracement, a 50% retracement? A right? So some of them can be used interchangeably. The way I tend to go is a pullback is like a flag. A consolidation is like, I'm typically looking at, 4 to 5%. A deep consolidation, 7 to 8%. A correction is 10. That's explicit, right? So you're like, is this a correction? Well, has it dropped 10% from its high? Then yes. A bear market is actually technical as well. It's not there's enough of us who think it looks bearish, so now it's a bear market. A bear market is 20% from the high to the low. That's now bear market territory, which is why I said we technically touched that right around tariff reveal party day. So yes, 10% pressed. You got that right. Does that make sense? And so you'll hear people say, oh, this is a retracement. This is a consolidation. Same thing. A pullback. I tend to think pullback is just like minor. These are little pullbacks through here. This is more of a consolidation. This is correction / bear. This actually touched bear down here. This red line was actually where it touched a bear market from these old highs. And if you look over here, this was a correction that we were talking about back in 23. The market corrected from here to here. So hopefully that's helpful. It can be confusing. Is a correction a good thing? Well, you'll hear people say, oh, it's healthy. We always have corrections. And, so if you look, let me get my drawing tools and then we'll start to posture this thing. It's a good starting conversation because I think this is a common question and no one wants to ask, right? You're like, I don't want to be the one who asks. So thank you, Bob Rowland, for asking. Here, this was about 10%. So that was an actual correction right there. Got to maybe 12. This one here only got about 8 or 9%. So that was a deep consolidation. These are just like standard consolidations, or if you're looking at this longer term chart, a pullback. This is a pullback. Boop, 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 goes. This one's longer. These are little pullbacks through here or minor consolidations. This was a bear market consolidation just for like literally, no one wants to talk about that now because they're like, that's a very quick bull market. It was bearish for like a day and then it turned around. So you're not going to really say it was a bear market, but it touched bear market territory. So now, right now, if we had a correction, it would put us to about here. Usually a correction is going to be a double dip. Sometimes a triple dip like this one back here. But it doesn't usually drop 10% in one fell swoop. It's usually going to give us a double dip like that. And so you can see that if it just goes down to here, that's where our trend line is. That's great. But if it breaks, we're probably going to lower our score. Not probably. We definitely will. Because it broke that 1.25 trend line. So, can be. Okay. PJ said he couldn't see the meeting listed. Phil, thank you for addressing that. He says you couldn't see it. Yeah, I actually noticed that our Wednesdays we had a drop, and I went in and added those for Glenn's Wednesday afternoon, and I couldn't see any holes in the agenda. So definitely reach out if you see that and let me know. Okay. Well, let's go talk about the actual score now that we kind of addressed what different types of market retracements, pullbacks, consolidations are. What do we have now? Nothing. In fact, one of the things I said for my long-term score, it is not going to change easily. For me to get to, so right now the score is a 1.25. What's going to make it go up or down? The only thing that would make it go up is if we kept going 3 more weeks and we got up and we touched the upper end of this. if we can touch the upper end of this, I'm going to give it the 1.5 to see if it can go down and then turn. And then this green angle back here is my 1.5. That's a 1.5. These red lines, 1.25. Purple line, 1.0. So these are remnants of prior times to just sort of help give me an orientation to what's it going to be. So what that means is this could drop all the way back down to the only one that doesn't make sense to me is this purple line. I don't know where this one's coming from. Oh, that's a moving average? Is that the moving average? No. Okay, I got rid of it. Can't remember what that was, so I don't want it. If we drop all the way back to here and bounce, that means to me this trend is intact. So we could have a pretty good drop. 640 down to 600-ish. That's a 40 points out of 60. That's a deep consolidation. 5 to 7% would put us into that range. That to me would be healthy. The correction would be a little bit more scary. But survivable for sure. Definitely survivable. I don't see my long-term score changing for at least 4 or 5 weeks. I don't see what could get it there, but I guess we'll see. Phil's giving me a hard time. I can't remember what that's for, so it's like when I'm putting together some new, something. It's like, what's this part for? I can't tell. Throw it out. You don't need it. Maybe not the best philosophy in hindsight. Whew. Okay. That's fair. There are a lot of remnant lines, so that's why I give myself a little grace on that one. Okay, let's keep going. Tell me if you agree, disagree, or have a different score. I'd love to hear. There's been a pretty good alignment in the group. Though that's not necessarily what we're looking for, right? We're not looking for assimilation. We're looking for, are we seeing it the way we're supposed to? Or are we talking about the right things that could influence this so that nothing catches us by surprise? I'm going to say those who have been with the group, we've done pretty spot on making sure that we have a good sense of what markets are. Now, does that mean we have the crystal ball that Steve C was looking for? No, it means that we have insight to help guide us. We have rails that are very, very important and very helpful rails to help kind of keep things going if the chimp ever breaks loose from his cage and starts smashing your keyboard. Okay. I can't. All right, let's go to the short term. I'm gonna go faster now. I told you I get to talking. Okay. Last week we changed this. We didn't. We talked that we might. Okay, this one is one I thought we could. But I actually, as I see this now, I feel like this trend is holding. This is what we've been scoring. I don't like to draw the short-term lines in a permanent fashion. It's a pain to keep track of them sometimes. You can see what a pain it is to keep track of the long-term ones. That extra lines go floating in there. And you also know that I have the same problem Sandy has, who wasn't concentrating, but I have a bit of an ADD problem. So I can lose concentration and focus sometimes. This trend is intact. It's the same trend. That's fine. We were curious as it came down if it was going to cause us to need to do anything, but we very quickly reversed and we're moving up. Now, if we start to see something like this where we then roll over and bust down below it, what does that mean? Well, it means we have a lower high. I did cheat. I didn't free draw those. I used the line drawing tool. I have to come clean. Those weren't real. I cheated. The lower high would be like, okay, let's take off a quarter of a point. We're breaking this thing. If we take out this low, we'll lose another quarter of a point. If we get into this type of an action, I'm not looking to quickly be like, oh, now this is a negative slope. Let's put a -1. That's not how it goes. You know that. We go into a merit demerit system where we say it has a lower high, lose a quarter. It broke the low, lose a quarter. If it comes down to a new lower low, lose a quarter. If it comes back up to a lower high, lose a quarter. So by this point, we would only be down to like a 0.75, a 0.5, intentionally structuring that analysis around that we're typically keeping a more bullish orientation. We don't want this. If you allow this to, I'm telling you from experience, from times that I did, I'm like, oh, now it's a negative trend. Oh, you're going to whipsaw your analysis to a point that it worsens your trading. You could try it. You can just to kind of see, but being a little bit slower on the short term to drop the score has been crucial in making sure you're ready whenever the consolidation is, you're ready to trade out of it. Okay. So I'm keeping mine the same. No change. Yeah, Steve C. I'm right there. It's holding up. There was some concern through here. What else concern do we have? This is not something we're going to score. But what is the concern about that box versus this box? Just in the quality of what we see. For me, it's the volatility of the candles. You can see that the 1, 2, 3, 4, 5, 6, the 7 candles in there are just on average bigger, more volatile candles than on average in here. And volatility tends to pick up around market turns. We want to make sure we are open to that. We're also going to talk about the VIX and what the VIX shows us about potential for market turns. The last thing we want to do is load a bunch of bullish trades on only to have this market kind of fall apart, right? That's the point of what we're doing. Being ready. Like there may still be a good bullish trade or two. Our Google trade looks great. But we have to be ready to adapt quickly. Be water, my friends. Okay. Let's go to volume. Yeah, we're moving pretty quick now. Let me get rid of all this extra space. Boom. Okay. What do we have here? I had a tie. And I said I need to reflect on this one. This one I feel like this one. So this was a tie back here. You can see it dropped, came back up, didn't move enough for us to go one way or the other. So that's a tie. This one barely dropped from this one. That's a tie. This was an engulfing, but it didn't drop 0.5%. We went from 634.46 to 632, so it only dropped 2.5 points. Or a little less, which is only about 0.3 or 0.4. So I did not give it. I looked back and I'm like, should I have? Based on an engulfing, but no, that's not the rule. The rule is how far did it drop? And if it's not at least 0.5% or right in that range, then it doesn't get the score, even if it's a bearish engulfing. We definitely scored this one for the sellers. So I have a 1 sell day. That's what I list first for consistency. 0 buy days. 3 tie days. And you might be thinking, all right, so we're giving it to the sellers. No. No. Why not? Well, because a tie goes to the buyers. So if this was a 1 0.13, it would equal a 0.25. Can you imagine if someone looked at my board and they're like, who is this guy doing math? 1 minus 1 minus 3 equals 2.5? No. But here, what this means is that this is a 0. It's barely in favor of the sellers. We expect the sellers to be stronger inherently, therefore, still scoring at a 0. Now, we put a line of sanity on this to say, does this make sense? For a sanity check, my line is slightly upsloping. Yeah, that makes sense. Bob Rowland says, what about 8.7? Let's go look at 8.7. 8.7, in fact, 724 is similar. It was above average, but not enough. 2 million. It needs to be 5%. So when we're at 70, it needs to be about 3.5 million above. We're pretty loose, right? I mean, if you look at like above average volume, there's not many traders who are like 5% is all I need. This is not breakout volume. This is above average for the S&P. I only need 5% for it to be significant to me. And you'll notice even just looking for 5% above average, we've only got 4 days in the last 20. This day, average 72.7. That day, 74.2. So we had 1.5 million extra. It's only about 2%. So it wasn't enough. And we wouldn't have scored it either way. If I scored it, I would have scored it for the another tie. And ties really are just there to mark that, there was a tug of war and it was influential. But you'll notice we closed on this and then we closed here. So it literally was almost identical on the close. Either way would not have scored that. So I'm a 0.25. No, I'm a 0. Stays a 0. So no change. In fact, when I did one of the things we do in our Friday meeting, if you don't know, and we were light on numbers on Friday, so most of you probably don't know what we did. Those who did, what a great day. We had an amazing Friday. Probably the best Friday we've had in a year. So just keep that in mind. If you're thinking, do I go? It's Friday. Yeah, you go. You show up. You do the work. Sandy's like, enough with the lecture already, buddy. Okay. Unchanged. All right, let's go to the second half of this analysis. Let's go. What's going on in the market? Fed's Bowman makes a case for 3 cuts in 2025. That's not helpful. I think Jer Bear needs to crack the whip and get the committee in line. It's not helpful to have people like, oh, actually, we maybe... That case is not there. Okay, sorry, that distracted me. Let's go do major market. What do we have? We have the NASDAQ leading and accelerating the lead. So this looks pretty good, actually. Then we have the S&P watermark. Then we have the Dow sideways. We have small caps just trying to keep up. Wait for me. But the market waits for no one. 133. What do we have? More of the same. NASDAQ increasing. Technology is doing its job. Technology's got broad shoulders. It anytime can put the market on and go for a run. That can put us at a 0.5, no problem. S&P second. Here is the Dow, and then still the small caps behind. Ooh, look at this Starbucks ad. They have a drink. Sorry, my ADD. I have to mention this. It's a oat milk horchata shaken espresso. Try it. It's amazing. It is amazing. Steve C said, "I'm gonna go get one after now." I'm getting one. Okay, sorry. Let's keep going. Looks like the missing event showed up. So thanks to all those helping to look into that. What do we have going on here? NASDAQ pushing. Like Stephen D just said, Russell pushed. It tried to make a little bit. But actually, really kind of the last 2 days, you can see the last 2 days, the S&P went higher. The last 2 days, the NASDAQ went higher. The last 2 days, the the Russell and the Dow went sideways. Fine for the Dow. One thing we're not seeing here, which is helpful to our posture, we're not seeing defensiveness show up at any point in any fashion. Love it. I have no expectation of this dropping because I'm like, what the Dow's kind of pushing. People are starting to move into safe harbors. That's not happening. We're not seeing that. So that's helpful. Press is probably waiting for me to go to the 22. He loves the 22. Of course, it's great. It's more of the same. All across the board, what do we have? NASDAQ leading. S&P second. Dow put down here. This thing will not get above a 0.5 until the Russell can show us something. So it could be a while. No change for me as well, Steve C. Friday's an opportunity to review the week's market an hour before closing. It can affect if you hold over the week. That is 100%. Like, I could not agree more. That's literally, if there's ever times where you're like, Scott, are you there? It's because something triggered where I'm like, yeah, I got to close that and I have to move over and make right. I agree, John. It's such a great way to get a preview to what we're going to do here to then inform us, should I keep it? Should I, if I'm starting to sense weakness in the posture, I'm going to definitely tighten up. I'm going to take more, keep less. 100%. I love that you said that because I agree. That is such an important one to wrap the week up with. So thank you for that. Appreciate it. Let's go do sector rotation. Couldn't agree more. Sector rotation. So sector rotation, before we go into it, really fell off. It held up better. And it's just the sectors are not holding up as well as the market. We're down to 2 growth-oriented sectors, I believe. Let's see if that's still the case. Now, here's the deal. It can stay at a 0.25, slightly bullish, with even just one. It's happened before. If the one is technology. It's a big sector. It's a broad sector. It's a strong sector. So if technology is the only growth-oriented sector in a leading position, but there's not a defensive battle, I'll leave it at 0.25. That's fine for me. That's the power technology has. Communication services at the top on this chart. And then what? Then we see tech moving into its rightful place as that leader. We've got discretionary still up there, financials, and industrials. When we look at this looks great. All 5 up there above the market. All 5 of the growth and nobody else. Just underneath is utilities, and underneath that is staples. I want you to notice staples has had a little pop. Even on this, we can see it. That's why we're thinking if there's a defensive sector we're going to search, it's going to be staples. For utilities, I really would just look at XLU. I don't necessarily need. We never find great utility stocks. That's just, it is what it is. I just would trade the ETF, but staples we can. So let's keep an eye on this. This is confirming what we said we're going to do on Monday evening, tomorrow evening. Boom, look at utilities. That feels a little defensive for a while there. I don't know, maybe not. John Welsh was bringing up exactly what I was about to go to, which is maybe not, because why? Well, AI and crypto are energy intensive, and it's having an influence on the sector. So it's harder to tell, right? It's harder to tell. It's unfortunately requires a bit more discretion for us to be like, what do we think? Do we think it feels more defensive this time, or is this more of a ChatGPT released their 5 model, ChatGPT 5, and whoa, I actually didn't like it as much, and apparently a lot of people didn't, and they put 4.0 back out. So I think they've got some work to do on that one, but I'm just saying, it's putting it out there. And just like in the crypto space, we looked at it the other day and we were like, how many are there? And it was bad. It was mind blowing, right? It was like 13,000 cryptos, which is untenable. Untenable because it is, there's just no utilitarian purpose for that many cryptos, right? But AI, you've got Meta building theirs. You've got Microsoft building theirs. You've got Amorphic. No, what is it? Building the Claude model. You've got Gronk. You've got ChatGPT, right? You've got all these different models. And they're continuing to build them. It's like, oh, we're going to build a better model. A lot of them are hard to trust, but it is what it is. Okay, now you'll notice we've got, who's at the bottom? Healthcare's at the bottom. Discretionary's at the bottom on this chart. Energy. You've got financials. This is a little bit more of a mixed bag. So let's just keep at the top. We've got utilities, which is questionable. We've got technology, and we've got industrials. Those are the top 3. Still growth oriented, a little mix of potential with utilities. Yeah. And it's been stuck on this time frame for quite a while. It really got beat up around tariff reveal day, right? Obviously with consumer being so influenced by tariffs. So that one got beat up, but it's recovered some. Let's go to 66 to score it. Oh, well, I'm glad I said what I said, because we do only have one at the top on our scoring time frame. We've got technology, and it's up there like a proud, magnificent lion. Standing tall, carrying the way. Okay, where have most of our trades been? Technology. It's where we're looking, right? Or technology adjacent. We do love you, tech. We pay homage. So, yeah, still looks okay. I'm scoring it at a 0.25. It held up. Who's close? Industrials is close. Discretionary is close. Comm services is close. So we've got 3 growth oriented that are close. None of it's enough to try to push it higher, but it's also not going lower. Utilities is down here. Staples is down here. Healthcare is down here. Again, not much empirical evidence in this comparative analysis that we're doing of defensiveness yet. Let's go to the 22. But here we have utilities at the top, technology second, staples coming in third. So this is where it's like, oh, okay. For the first time, there's like a wait a second. Okay, this is the perfect time for us to then prepare. We're not late. We're still early. We're still just barely seeing the initial evidence of it, but this definitely confirms what we said. Staples or non-discretionary is where we need to do some searching, and probably keep an eye on XLU to see if it gives bullish signals. Scoring wise, no change as well for me. Okay. Let's have a real quick Fed watch just to go through this, and a real quick calendar since we're here. Yeah, market's really gunning for it, which means if it doesn't get it, it's setting up for some disappointment. The 29th, even more so. And so nobody thinks we won't get at least one rate cut. Most people think we'll get at least two. Did you hear that? If anything, what Jer Bear was floating was the possibility of an increase. Did anybody hear that? It was like, oh wait. So I don't think that'll happen. I think that there's an unfortunate political divide forming in the Fed. Not surprising that it is, but a bit disappointing for me personally. I don't like to see that in monetary policy. I saw a senator, I think I mentioned this, who was like, if the Fed would cut the rates, we would save X amount of billions of dollars on our debt. It's like the Fed's job is not to pay for your bad spending, putting us in a deficit. That's not its job. That's not its job. Its job is to control inflation and monitor employment. Those are its two key functions. It's not about it cost us less if we would just lower the rates. That's not how it works. And that to me strikes a fundamental misunderstanding of our economy in general, which is okay. So they always put it in a range. Where we are now is 425 by 450. That's like the Fed range. So 400 to 425 is a 25 basis point. And then we go here, 375, 400, that would be 50 basis point. And we come out here, this would be 75. This is what that Michelle Bowman was like, oh, I'm putting out a case for this. And you've got 46% of people who think that could happen. I want to remind you that this is not this thing shows how often, if you've been with the group for a while, there's so many times where we've seen this thing just expressing hope, not actual what do we think's gonna happen. And I think that we're seeing that as well. He can't fire him. That can't happen. There's no way he can fire him, which is why it's an interesting little battle. And then every time he talks about it, people are like, you've got to stop talking about that. Okay, let's go to the VIX, and then we'll get through the watch list. I'm going to steal probably 5 minutes extra of your time, but not much more than that. So thank you, and I apologize. Let's go take this back to 6 months. Let's go to the VIX. This is an important one. Great day. I mean, we ended up really down pretty well, but it's still not quite enough that if tomorrow we have an inside day and then the next day it turns, if that happens, this is a low and it's higher than this low. It's not by a lot. It's only like a half a point. It's a higher low still. Now, I told you back in this area, we don't anticipate higher lows. And we'll be glad we didn't, because it was a great day Friday and we had a great retracement on the VIX. Still holding up a bit of that volatility. Right? Still holding up a bit of that volatility. So we have to continue to watch this. Now, it didn't trigger. Last week it triggered 1, 2, 3, 4, 5. Last week it triggered on this day when it broke out and we scored it down. There's no change. I actually was thinking that there might be. There was a couple of places that I thought we might drop, but no, it's holding up as a 1. We're back down to 15. That's great. That's a good level. It's still a 1. It's still bullish, but it does still have the potential of a hedge signal. And so let's just keep that in mind. It's the market's holding on to just a little bit of that vol, and if it comes popping back in, that's likely to influence how I trade early next week. So now, if we can get back down to 14.7 into the 14s, great. It resets it. It invalidates a hedge signal, but it's still like if you've got 4 or 5 bullish trades on and the VIX is down at that 14 and a half, should you be thinking, oh, maybe I do? Yes. Yes. We've talked about that before. There's been many times where we had that exact question and answer, and then the market pulled back, and then it's like, yeah, I'm glad I put that hedge. So if you're carrying a lot, you should be thinking about a hedge as it moves down into that area, 100%. Okay. But as far as the score goes, unchanged across the board. Stable. Stable was my prediction. Stable's what we got. My thought was, if anything, it would go lower. I'm still a little oriented that way, but I feel pretty good about the stability that we see. I don't see a lot of like, oh, this thing looks like it's really showing up for the sellers. 4.5. Great. Stability after a 1-point drop. That's helpful, right? That's definitely helpful. That makes it feel like this is more likely to be a pullback, a consolidation, but not a correction. John put a hedge on Daring Fridays, which means you probably got it pretty cheap, John. Am I right? If you're buying those puts when the VIX is down around that 15, just above 15, you're going to get a better price than we've seen we had that 14 for a few days. And if you're carrying some bullish trades, yeah, that makes a lot of sense. Keep us posted as we move into Monday, Tuesday. All right, let's go through the watch list. I'm going to get my note card ready. We're going to fly through. We've done everything else, so this is going to wrap us up. Okay, what do we like? What do we want to trade? Well, let's see. AAP, I kept some still. I mean, it's near enough. It's holding this line. I've got some time. Let's see what happens with this guy. Apple popped on news. Nothing was there. I would trade this as soon as it starts pulling back. I'm not even going to put it on the list yet. Amazon's not done enough. It's not done enough for me, even on a pullback, unless it does a sneaky reversal. What does that mean? Well, if it pulls back just for a couple of days and then turns like this, it never really had like the break that we're looking for, but it's kind of a sneaky reversal, reversing out of this drop. That's what I mean when I say that. It didn't give like the classic break of consolidation to start the setup. How do I refresh my watch list? Is there a scan on TOS or Finviz? Yes, remember that I have our construct for bullish trades is actually saved as a link, and you can go run it. And then what I apply is a sector filter. And then I go through one group at a time to find the best pieces of that sector. That's what we're going to do. Then when we find the best pieces, we add it to the list. As we find things we're not going to trade, we drop it from the list. So this is a fully curated from week to week, this watch list. And I just updated it if you go to the resources, there's a document that has like the most recent version of it, or at least very close. I usually update it about once a month because we don't do a lot of changes, right? I don't update it weekly because we don't necessarily even change weekly, but monthly, yes. So that's how I do that. APH, bullish, but not really giving entries. I need some kind of a consistent pullback to give me an entry. Credit not looking good in a consolidation. This needs to bust, pump. That's what I need. That's the standard reversal pattern. I need that. BAC, it's kind of coming off a low. beyond, possibly in a hiccup from this bounce. If this holds and goes again, those who got in and stayed are going to be like, okay, it held support. Those who didn't would think maybe there's an entry for me here. Citi looks viable, holding support. Trend is good. If we can see some price move up out of here, I think we have something. That's a leader in the financial sector. Caterpillar is on the list. I got to put Citi on the list. I forgot to write my list. Damn it. None of them were on yet except for BYON, Citi. I'm going to put Caterpillar on as a potential. CCJ, no. And CCJ had some iffy volume. I'm thinking of throwing it off. CLS is a possibility. That actually was a possibility on Friday for a break of a pennant style pattern. Late in the day, though, Capital One, just like AXP, in a consolidation. Coin down. Cisco. Cisco made a little pre-earnings pop. I get the frustration. Delta, no. Dash, yes. DoorDash. People are buying delivery food, apparently. It's pulling back from a big earnings report. Looks fine. EA. I'm going to put it on. It needs to pull back, but it's looking strong. And it owes us some money. EXPE. I'm going to wait for a little bit. Ford, I'm waiting. Futu looks like it's trying. It gave a signal back here. We put a different trade on, but we looked at that. Still trying. I think it could make that move. Not much left to start a trade, though. GE. I think GE and GE Vernova are both going to go. Lot of strength in the trend. It has this minor move. Sometimes that's all it gives before it starts moving again. GE Vernova, kind of the same thing. I'm going to put them both in there. Obviously, would only trade one. Basic bullish. That's it. You got it. You got it. All that needs is a sector filter. Gold, no. Google, we're in. Looks good. Moving great. Hoping it gets to its first target Monday. Let us take a chunk of profit. Tighten up some stops. Move on. Goldman's the best looking one here, but not now. Hasbro, no. Hood looks good. Hood's a strong one. Howmet, definitely a setup for us in the industrial space. IBM getting battered. Just getting battered. IVZ, I put this on the list, but I feel like it got way overextended. I'm not going to trade it. I'm not going to keep watching it. I'm taking it off mine. Small caps holding up. Joby, maybe. It's looking like a Head and Shoulders possibly is forming there, so be careful. KKR. I like KKR. An old friend from last year. We had several good trades in a row on this. It's time to water the bonsai.
This isn't
Oh, what did we decide about LVS? Yeah, that's got some strength to it, right? I hear that Vegas is like empty right now, though. Anyone else hear that? I hear that that's like never full. I don't know. Some iffiness about. Always seems crowded the last couple times I've gone. Meta looks good. We like communication services, and we like the strong stocks in communication services. Morgan, iffy. Microsoft, yes. Good earnings report coming into a solid trend. It's a grinder though. Micron broke out. Nothing there yet. Netflix is trying to break the consolidation. If it comes back down, then we have something. It's not there yet, but it's getting close. Yes. It was better when she was there. Didn't she have a residency there for a little while? And then she's like, nah, I'm out. Nvidia, still strong. One can only tolerate Las Vegas for periods of time. Pagaya, oof, it's choppy. I'm going to wait on that. PLTR, we're waiting for PLTR to just take a little rest and give us a chance to trade it again. Come on, PLTR. Phil heard the same, way down, right? Yeah, it's crazy. QS, I don't know about this one. Chopping around down there. I think it's not really in our vein. If it would have held above, I'm taking it off my list. If it would have held in here, there would have been something. But now that it's all the way back, you're like, am I fighting this thing? I don't want to fight with it. It doesn't make sense. QS, where are we? I'm taking a few extra minutes even. Roblox. Yes. Still viable. Reddit. Overextended. Rocket Lab. Coming out of earnings? I think there could be something here. Let's watch this one and see. RTX, definitely looking strong. Silver looks okay. SoFi, I like SoFi. It looks okay. SPY, here's TME. TME's got earnings. We're going to have to wait on that one. TSM, not as strong. Uber, I don't think so. Visa, no. VRT, whoops. VRT, yes, looking good. Still things on our watch list, still opportunities to consider. WMT overextended, a bit of defensiveness there, though, I think. Win, not as good. I like Las Vegas Sands better. I'm actually going to maybe kick Win off the list since we have Las Vegas. I don't need multiple casinos. Okay, there it is. How many did I end up with? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. It's a good opportunity list. It's still representative of a bull market. We're still a 4.5. We're looking for bullish trades. We are going to watch that VIX very closely for a hedge signal and, act accordingly. But that's what we're moving forward with. So it's great to see everybody. I appreciate the extra 9 minutes. I will see you tomorrow morning, 15 before the market opens, to allow us to transition our market posture into our trading posture. This is how we feel overall. Trading posture is, what do we do now? Good to see you guys. Have a great rest of your Sunday. Go enjoy a horchata iced milk shaken espresso. Beautiful. You'll thank me. See you guys tomorrow. Happy trading.
Recording stop.